There we go. Hey everyone, welcome to Swan Signal Live. Sorry for the bit of a late start, but we are here with Adam Back and Lyn Alden. I'm extremely excited about this episode, as I hope all of you are as well. Huge topics to talk about today. The headline is, of course, the Bitcoin bond, created in large part by Blockstream and run technically by Blockstream. So we have the man here himself to talk to us about the Bitcoin bond, and Lyn Alden to give us her thoughts and commentary as well. Before we dive in, I want to share a little bit with you about Swan Bitcoin. We are the safest, easiest, and fastest way to stack sats this holiday season when you are hanging out with your friends and family and you want to bring up Bitcoin with them. Have them on board with Swan in about 5 minutes. Go to swanbitcoin.com and just have them set up. It's a pretty quick process, and 90% of our users are past KYC and able to start buying Bitcoin within 5 minutes. It's one of the best experiences, I think the best experience to onboard on Bitcoin in the United States and around the world. You can onboard internationally as well. It might take a little bit longer, but we can serve international customers as well with wire deposits. Of course, we do ACH deposits in the United States. So grab your friends and family, get them onboarded in about 5 minutes on Swan Bitcoin, start stacking sats. They can put in 10, 15, 20, $100 a week, a month, and just have that plan running and accumulate Satoshis for the long term. We, of course, also have Swan Private at swanbitcoin.com/private. This is our service for high net worth individuals and corporations. We onboard entities incredibly fast as well. We've worked really, really hard to make the entity onboarding process as painless as possible. We've gone from, doing a lot of this paperwork manually for, taking a couple of weeks, like a lot of the other exchanges in the United States. And now we can onboard entities in as little as a couple of days. We had one last week, I know, that onboarded and was able to start buying Bitcoin for their business in just 2 hours. So it's a fantastic experience. Go to swanbitcoin.com/private and check that out. And we also have recently launched Swan Advisor Services. So we're still in a kind of a private beta mode right now, serving customers and gathering feedback to build out the product. So early next year, Q1 next year, we'll have a full-fledged product for financial advisors. So if you'd like to start stacking sats through your financial advisor, let them know to visit swanbitcoin.com/advisors and get them set up there. Okay. We're going to dive into this one now with Adam Back and Lyn Alden. Welcome, Lyn. Welcome, Adam.
Thanks for having me.
Hi. Of course, Adam Back is CEO and co-founder of Blockstream, and he is a true OG. So a lot of you Bitcoiners like to call yourselves OGs because you've been here since 2009, 10, 11, something like that. Adam has been working on projects that have been critical to Bitcoin for decades now. He's cited in the Bitcoin white paper itself. He's also cited in the Tor white paper. So Adam, thank you so much for your contributions. Welcome back to the show. We also have Lyn Alden. She's a researcher and investment advisor, one of the top minds in the space. We're also very fortunate to have welcomed Lyn recently to the Swan Board of Directors. So welcome back to the show, Lyn, and welcome to the Swan Board of Directors.
Yeah, super excited to have this conversation because it's really big news, obviously, and really excited to hear Adam's take on it.
Likewise. So we'll start talking about, I want to get into the technical and, of course, the financial aspects of the Bitcoin bond. But let's start with the technical aspects. There's a lot of listeners and watchers who will, not be familiar with the Liquid network or not fully, understand how it works. And it is a very important part of Bitcoin, the Bitcoin ecosystem at this point. The Bitcoin bond is tokenized and issued on the Liquid network. Adam, I'd like to just give us an overview for those who don't know much about how the Liquid network works and how, in particular, this bond is tokenized.
Right. So a lot of people are familiar with Lightning, and Liquid is effectively another layer 2 for Bitcoin. And things you can do on Liquid. So Lightning is a way to do faster and cheaper Bitcoin transactions, and ultimately every Lightning transaction is a kind of delayed settlement Bitcoin transaction. So it will only do what Bitcoin can do, where Liquid is a sidechain, so it can add new opcodes and features, and it does that. So as well as being able to transact Bitcoin in it, it looks very Bitcoin-like in terms of the user experience with a wallet, the workflow, post addresses around and things like that. It has a number of other features. So it has confidential transactions. So the amounts and types of assets in transactions are encrypted. So only the sender and recipient can see them. And nevertheless, the kind of cap or, everything adds up in terms of the inputs and outputs to a transaction is verified with compact zero knowledge proofs, basically. And then it has support for assets. So user issued assets and a special type of user issued asset, which is the Blockstream AMP service, which is a way to sort of manage securities. So it's a multi-sig, and then there can be rules implemented on a server that is some kind of policy, like maybe this asset is available only to US investors or only to European investors or only to investors who are qualified or who have provided KYC and things like that. So Liquid AMP is a tool to do that kind of thing, but you can use it as a tool to program other things. And so there's something called a Blockstream mining note, which is a Luxembourg securitized 2000 terahash mining instrument that's issued by Blockstream. And that works using Blockstream AMP. So people who are familiar with that will know how it works. And then the El Salvador Bitcoin bond is also proposed to be an AMP asset. So running on Liquid, same kind of user experience. You can also, store these assets on a hardware wallet, and use a Green platform or some other wallets like Sideswap and Spectre and other wallets have support for Liquid as well as Ledger and so on. So there's various integrations. A number of exchanges have Liquid support so that you can. Another common asset that's on Liquid is a number of stablecoins. So Tether, Bull Bitcoins, LCAD, which is a Canadian dollar stablecoin, and more. So Sideswap has a Euro stablecoin on Liquid. So that's Liquid. I think one of the common and interesting features is sort of atomic swaps, trustless orders, that kind of thing. So Sideswap is a Liquid wallet and a swap marketplace for liquid assets. So I'll pause there.
So it's a federated system. How many, I guess, members of the federation are on the network now?
I think something like 60. So a lot of different exchanges, financial institutions, mining pools, prop trading companies, all kinds of different entities, basically. And so it's the network. I mean, Blockstream is a technology provider. The network is operated by the participants. And, even though it's federated, I think people tend to, assume too much control in its day-to-day operation. You can transact. Nobody's asking you to sign up for anything. Zero sign up. Same experience to set up a Bitcoin wallet, hardware or software. The difference is there is no mining, and so the blocks are processed by block signers. And there's a subset of these 60 members have block signers. They sign the blocks, but as we found out, as everybody found out or learned from the block size debate some years ago, and the resolution to that ultimately it's the asset owners and the value in the chain that sets the rules in the chain. So, ultimately, if there was a tussle between the block signers and the asset owners could fire the block signers and coordinate to bring some new block signers in. And I think some more factors kind of provide a trade-off as well, which is due to the confidentiality. It's much harder to selectively interfere with transactions, to block them, to front run them. If you don't know what the transaction is or the swap or the trade settlement is, you can't front run it because it's all encrypted, or you can't usefully front run it if you don't know what it is. And the other thing that, the finality is fairly fast because blocks are on a 1 minute interval, and the consensus algorithm is not probabilistic, as it's necessarily probabilistic on Bitcoin, but here there are block signers, so it doesn't need to be probabilistic. And so it's final after 2 confirmations. I mean, typically it's final after 1, but there's some kind of esoteric race condition that could occur. I don't think it's ever actually occurred in practice. So after 2 minutes, it's final. So unless you catch something in 2 minutes, it's too late. So that's far too fast for human judgment, basically. So that's the plan. I think the other thing is to bear in mind that the assets on Liquid can't be removed and sent to another chain or something because they were natively issued on the chain. So the only funds at risk from the Federation block signers in a kind of 2/3 block signing majority for uptime and kind of security are the Bitcoin pegged in, and Bitcoin are primarily used for fees because it's a Bitcoin layer. The fees themselves are in Bitcoin or liquid Bitcoin. And so those funds are managed sort of in an automated way. So the block signers are actually hardware security modules. And so each of the companies running these things has put in their, in their exchange security place where they store their secure exchange servers, they put an extra piece of hardware. And so a second line of defense is that to actually compromise the system, a majority, a large portion of this network would have to, succeed in tampering with the hardware and have the intent to steal from the users. And I guess another sort of secondary defense is we know, everybody knows who they are because it's a group of companies, and so they have skin in the game in, not ripping off their customers, not hurting their reputation, and in being able to continue to rely on and use Liquid. So I think it's a sort of trade-off point, somewhere between if you put funds on a single exchange, now of course the exchange could run into solvency issues or go offline, and storing it in your own wallet on the main chain, of course that's the most bearer and uncensorable and final thing. So it's somewhere in between there. I think Bitcoin stored in a liquid network are far safer than storing it in the custody of one exchange, because any given 1, 2, 3 exchanges could go offline or be malicious, and you wouldn't be impacted. So that's the kind of trade-off.
Yeah, so it's pegged to Bitcoin, so it'll basically it's underlied by the reserve asset of the system, but you're making some trade-offs in terms of like the security model of the base layer to make Liquid more amenable to supporting something like a financial instrument like the Bitcoin bond. And you've been running your own financial asset, right? The mining notes on the Liquid network for a while now.
Yeah, so we started the first sales tranche back in March this year, and the go live date was early July. So it's been running for 5 months now, and has mined, I have a dashboard here, about 2.2 Bitcoins to date. And so it like the financial, the Blockstream mining node is, it gives you the economic rights to the Bitcoins mined by 2000 terahash over a 3-year period. And so, the original offering price was 200,000 euros, but it's gone up, both due to kind of input costs and tapering over time, pre-market discount, and the value of the Bitcoin that it's mined today increasing as well. So the tranche 7 was sold recently, like a week or so ago. That one was at 320,000 euros. But you have to bear in mind, with 2 Bitcoin in it, you're looking at, they were like 57,000 over 1.13. Yeah, there's like about 110,000 euros worth of Bitcoin in there as well, right? So that's part of the makeup of the instrument. And, they're all fungible as well, the different sales tranches. So what we do is we market by Bitcoin. So as we add more hash rate, we add as much Bitcoin as the existing units have mined at that, switch on moment. So that makes them all fungible.
Okay. So then I guess the benefits of of the note then are paid out on the Liquid network in LBTC. So if I have, if I earn a certain amount from the 2000 terahash mining activity on my note, how do I get paid?
So actually, it's not paying dividends; it's rolling up. So it's a kind of prepaid, it's a kind of term investment. So you pre-fund it. You don't pay fees monthly for the power. You don't get a dividend for the Bitcoin. Bitcoin rolls up inside, and we chose to do it that way because some complicated modeling that we'd been doing mining for a few years, and we noticed that it's actually more profitable. If you've got a certain pot of money and a certain income stream, it's actually more profitable to go smaller and not sell Bitcoins to pay for the power. Because, when the price goes down and the hash rate goes down, you mine a lot of Bitcoins. Those extra Bitcoins are what really count. And then, if you get through a cycle and the price comes up again, that will save the day. And so, we did some mining through a period where, if you model what if we had bought Bitcoin at the beginning, and it was over 2 years, and at the beginning of Bitcoin price was 15,000. At the end, the Bitcoin price was about 7,000, 7,500. So if you'd bought Bitcoin, you'd be down 50%, but we were up 25% in dollars. So we were like, well, how did that happen? And how it happened is the price fell all the way down to 3,500. So that kind of gives approximately when this was happening a few years ago now. And so we mined far more Bitcoins than we expected. In fact, 2.5 times as many, right? So even though the price was half, we'd mined 2.5 times as many Bitcoins as one might have expected. And so we ended up with a 25% dollar increase over that period. And so the lesson, and then prior to doing the bond, we went and back tested all 36-month periods on a monthly basis. And worked out the average return, and that this strategy was a good strategy. So we baked it into the bond, and we also wanted to encourage people to, not spend the Bitcoins as they come off, so that we, figure that a default behavior for the bond is a way to encourage that. You hold it to 3 years, and then you get your Bitcoins paid out. Okay. And at the 3-year mark, you can choose how to get paid. Liquid Bitcoin, on-chain Bitcoin, or even a Euro wire transfer if you really want. And some investors may be not set up to handle Bitcoin, so it's a way for them to get the Bitcoin exposure as well.
That makes sense. So in the case of the Bitcoin bond, then the asset itself will be issued on Liquid. I would hold that in a wallet, like a Blockstream wallet, for instance. And as dividends are paid out, I would be paid then in Liquid, or if I had a choice, I could be paid in some other some other asset, I guess.
So let's just clarify. So now we're moving on to the El Salvador Bitcoin bond. So I just want to clarify, the issuer is El Salvador, the government itself. Sure. And Blockstream is a technical advisor, and we acquired a hedge fund a while ago, Demista's company, Advent Capital. So we're a hedge fund manager, so we have some financial modeling expertise in-house, and so we did some of the modeling for this bond. But the issuer is El Salvador, and Bitfinex is in the mix as the bookmaker. And so they are working with the El Salvadorian government for kind of securities licensing, so potentially a new jurisdiction that provides, business-friendly licensing terms for the operation of an exchange. And so they're working with the government to get something set up there, and then they would, provide the market, like a market for you to trade these on. And, they may be tradable on other markets, and they're also a liquid AMP token, so you could withdraw them to a wallet as well. Nice. But I mean, there's something, there are a number of unusual things about this bond as far as normal sovereign bond issuances go, like the makeup of the investors, the venues and advisors involved are, of course, more crypto-centric, at least on this first tranche. And the use of capital is also unusual, and we can talk about that.
Lyn, do you want to give us, what your understanding of how the bond works, and Adam can provide any color that he might have?
Well, so from what I've seen, the full prospectus is not out yet, but I have researched it. Especially, I was on another podcast where I was asked about it, and I had not, fully researched it. So I after that, I dug more into it. Basically, they're issuing these 10-year duration bonds, and they're going to pay 6.5% interest annually. and then they're going to take half of it, put it into Bitcoin, and the other half is going to be used for infrastructure, including mining infrastructure, that'll hopefully be, economically useful. And the way it's structured is that the yield is lower than El Salvador's other sovereign bonds, and we can get into that later actually, because that's kind of one of the key risks to watch for El Salvador is the distressed state of their other bonds. But anyway, they're able to issue this if there's enough subscriptions to it. They're able to issue this at a lower rate, with the caveat that investors get if there's profits associated with that portion of the Bitcoin. So if Bitcoin appreciates in price, then after a 5-year lockup period, investors get to participate in some of the price increase of that Bitcoin. And so in some ways, it's similar in kind of strategy to MicroStrategy's bond issuance. Their convertible notes where they they might have a low yield, but then you get that upside potential, right? So the appeal obviously is for a bond manager that happens to be a Bitcoiner or bullish on Bitcoin, because there's all sorts of there's trade-offs between owning Bitcoin versus owning the bond. Some Bitcoiners might want to buy it, but especially for pools of capital that have to own securities, right? They might not be able to own Bitcoin directly, but they might still want to express a directionally bullish view on Bitcoin. And these obviously these bonds have counterparty risk, but they're one way to get Bitcoin exposure. I know that one way Adam described it is basically you get a bond, but then you also get a number of options that expire over a 5 to 10 year period that basically give you a call on some of that stack of the Bitcoin. And so it's an interesting way that I think, for anyone who's bullish on Bitcoin, and obviously El Salvador's president is, and there's a large pool of people that would be, and this is a way to potentially help El Salvador, build out their new infrastructure and to potentially give wealth to that country while also, if Bitcoin does well, then the bondholders do very well as also.
Yeah, Adam, anything to add to about the structure of the bond itself, and maybe just your thoughts on how big of a deal this really is for the international or sovereign debt system.
Right. So, so Lyn mentioned the spend on infrastructure. So there's two parts to that. One part is to build, so the power generation in El Salvador is partly, the geothermal power. People talk about volcano mining, and they're using geothermal power. It's the same kind of power that they use in Iceland, actually. So so they're gonna basically build some more power infrastructure, and that's generally good for the country to have more power. And then their idea is to use some of that power to do mining at the sovereign level of Bitcoin. And they're already doing a certain amount of mining. If you've seen some videos online of miners being powered up, and they are at the site of one of the existing geothermal mines. But this is they're proposing to sink a new one, basically. And then, so about the about the existing bonds. So they have about, we're not kind of experts on sovereign bonds by any means, but just looking at the financial tools that report on bonds, they have about 8.2 billion worth of outstanding bonds, like maturing off into the future. These are long-term bonds, right, 10 years and so on, and at various coupons ranging between sort of 6.5% to 9.5%. And then another factor with bonds is that you can trade them during their period of operation. And so, if the bond is discounted, like if it's selling at a lower price, that means you're effective. If you buy it, at maturity, you would get the principal back, so you benefit from the discount, and you get the coupon as well, assuming there's no default. So at the moment, to Lyn's point about distressed debt, some of their existing bonds are trading at discounts, so that the 8.5% bond is maybe trading at enough of a discount to be more like 13% when you adjust for that discount. So you're just going to divide the remaining duration by the discount, and that's going to give you an additional premium, assuming the make good on it, right? So that's what people. There was a lot of discussion about 13%, but that's not actually the coupon. That's the implied yield, and it's moving daily, right? Because it's a real-time market.
Yeah, Lyn. So you said you wanted to comment on the Bitcoin bond as compared to El Salvador's more traditional bonds. I think, like was just mentioned, typically at a 13% coupon, which is, I think, in the industry called low grade paper, and this one's at 6.5%. So what do you have to say about the difference here? Why is there a difference, and what does that difference, the delta between the two coupon rates, indicate to the bond market or to bond buyers?
So a couple things. Yeah, as Adam pointed out, the bonds that their current sovereign bonds, they were not issued with a 13% yield.
Mm-hmm.
They were, depending on which specific duration we're talking about, because it's several different tranches of bonds, but they were issued with high single-digit yields, which is common for emerging markets. And however, since that time, they've been traded by the market to sell at a discount to their initial
Mm-hmm.
values, meaning that the yields are much higher. And that doesn't really affect El Salvador during the duration of the bond, with a caveat that I'll get to later. And so if you look at the timeline, around the time where the president was replacing judges, and then also after the Bitcoin announcement, the legal tender announcement, basically this summer, the markets have generally distanced themselves from El Salvador's bonds, and so there was a credit rating downgrade. So now they're considered distressed. Like, they're not just junk bonds; they're kind of like the lower end of junk bonds. And then the market has seemingly agreed with that, and so they've generally sold down bonds at maybe a 30% discount. It changes all the time, and the risk. So getting back to El Salvador, the risk is that if they have to go back to the market for new capital, that would be roughly the rate that they would be issuing bonds at in order to get new financing. So if they were to issue a normal bond today, a normal sovereign bond, nothing related to Bitcoin, just a sovereign bond, dollar based, they'd be issuing at roughly a 13% yield, according to current market numbers. And so that's how emerging markets can potentially have a fiscal spiral, because they don't print their own currency, and so they're reliant on getting capital at reasonable rates to deploy. And 13% is a really distressed rate. It's really hard to be profitable and to use it constructively at that level. And so as their existing bonds come due in various years, and as El Salvador has financing needs, the fact that their bonds are in distressed rate is one of the biggest risks, I think, facing El Salvador's financial position. And so this is actually a pretty clever solution, because they're building infrastructure with this. If it goes well, they're raising capital, and then they're also basically locking in some Bitcoin that hopefully they'll benefit from over time. And so this is a way to raise capital for a method that is cheaper. So what makes them different, obviously, is that investors get a lower yield. They get a 6.5% yield, which is more in line with what El Salvador was yielding before their bonds became distressed. It's more commonly in line with these types of markets. But then you also get a Bitcoin dividend, should Bitcoin appreciate in price, compared to their entry level down the road. And so you basically, if you run the numbers from the perspective of someone who's not very bullish on Bitcoin, the bonds are not super attractive, right? If you use kind of the common bond and option kind of pricing models, it's not the most attractive thing. But if you are a bullish on Bitcoin for a variety of reasons, if you have a long-term 5 to 10 year constructive view on Bitcoin's price, you think it's going to go up multifold over that period, as your base case, then the bonds are actually more attractive than most other types of bonds. And so there's a couple ways that you can conceptualize it, but essentially it's El Salvador's kind of tapping into a new way to finance their needs. And I think the math makes sense as long as they can attract a number of bullish Bitcoiners. And they could buy it for all sorts of reasons. Some people might just they want to see El Salvador succeed, so they might be doing it for ideological reasons. They also might just be doing it to differentiate their risk profile, right? So I mean, there are scenarios where, for example, let's say Bitcoin goes, it does well, but it doesn't do fantastic, then you could actually have a situation where basically that 6.5% yielding bond with some Bitcoin upside at the end could actually outperform Bitcoin. But in most bullish scenarios, Bitcoin would do better. But then there are large pools of capital that have to own securities. They could be bond funds, they could be other types of funds. And so if they happen to be bullish on Bitcoin, this is a way for them to get that exposure. One of the kind of comparisons I've been thinking of is during the global financial crisis, there were a lot of companies that obviously ran into distressed financing. That's what happens during recessions, where companies have trouble refinancing their debt at normal rates, at acceptable rates. And so, for example, during 2008, you had companies like General Electric, Bank of America, and Goldman Sachs run into distressed situations. Now, they weren't at the bottom of the barrel like, say, Lehman Brothers, where they were just completely insolvent, but they were borderline. Like most things at that time were very borderline. And so Warren Buffett, for example, made deals with them, or he offered them very reasonable financing, right? So like 5-6% yield financing, which was lower than they could get at that current illiquid distressed time, with the caveat that Warren Buffett had these warrants where he could convert his stake into equity. And so if those companies were to survive and use the capital well and recover 5-10 years later, his investments would pay off very handsomely. And so the bonds are kind of like that in terms of risk structure, in that you're providing more reasonable cost financing, but then you have a lot of upside if that financing is used constructively, if Bitcoin does well, if the infrastructure is pays off well, and if El Salvador has reasonable GDP growth over this period, then they have a shot at being good bonds. So it really it's I think it's a useful experiment because you're targeting a whole nother pool of capital, and then we're also seeing it tokenized, which I think is a neat addition as well. And I know the bonds come with other perks as well, so it's overall I'm excited to see how well it does, and I'm basically I have a constructive outlook on it.
Yeah, I mean, I think this first tranche is sold. The bookmaker is Bitfinex, and so presumably the primary kind of exposure is to crypto holders and buyers, right? But as Lyn said, in terms of different types of funds, they have mandates and rules about what they can buy. And so, to date, they have three main ways to buy Bitcoin without holding physical Bitcoin. First being Bitcoin ETFs. And as we know, the US one is not ideal because it's futures based, but it's there now. And there are other ones in Canada and elsewhere that are spot based. And that's a vehicle that different types of funds are allowed to buy. Another one is public stocks with Bitcoin on the balance sheet, like most famously MicroStrategy, but also some other companies, and also mining stocks, companies that are prop mining, build up Bitcoin on the balance sheet, and raise money on the capital markets. And so effectively, this bond becomes a third and new option, or future iterations of this bond could also be jointly sold by more conventional underwriters. So some of these bonds were underwritten, the existing bonds unrelated to Bitcoin from El Salvador were underwritten by Santander, a European bank, and bought by large funds. I think typically the buyers of sovereign debt are qualified investment businesses. So they are expected to have assets under management in excess of $100 million. So this is way beyond, accredited investors, which is one tier in the US, another one being qualified purchasers. There's like 5 million investable assets, so very high net worth individuals. And then this qualified investment business is just way higher again, right? So those are largely big funds buying them. And so one thing that's being done with this, El Salvador, Bitfinex, Bookmakes, and on Liquid Network sort of tokenized, is that they've proposed, and I believe this is El Salvador's concept, to make it way more accessible, so like $100 minimum buy-in, right? And presumably the average will be much higher, but it's pretty nice that they make it available to investors in El Salvador who different countries have different average wealth and annual income and things like that. So that's kind of friendly, but I think it will be let's see how the first bond does. And they're proposing to get this done in Q1 next year. So let's see how that does. If that sells out handsomely, that might be an interesting message to the conventional bond market, which is a very large market, right? It's, I think, something like $120 trillion of sovereign bonds. And there are different ratings of those bonds, but generally speaking, bonds today are paying interest rates below inflation and even negative. There are funds that are required to invest their money somewhere, and so there are definitely countries with negative interest bonds and funds that are putting their money into it. And so in that environment, those kind of investors are looking for yield and willing to look a bit further afield. So what we're interested to see is if they will bite on this. I think another way to look at the bond as well is it's a bit like, because there have been questions on social media to say, from a Bitcoiner perspective, or a normal investor, an individual investor, why would you buy this and not buy Bitcoin? And so I think the answer is it's a different investment, right? It's a kind of hybrid investment, and it behaves. There's a default risk, which we talked about, but other than that, if things go to plan in terms of the economic situation improving as they do more investment, their economy improves and so forth, that there's something here which has a kind of money back part of it, right? So it's kind of like a structured product. So there are capital protected structured products you can buy, kind of more hedge fund, pre-qualified kind of thing, but you can buy these things on a market if you talk to some brokers. And basically what it's saying is, you put in your pot of money, $100,000 or something, and after 3 years, you'll either get your money back or you'll get 25% of the price appreciation of this stock index or something. There are lots of them, but that's a general pattern. And so, for as a matter of interest, how those things are constructed is they will, let's say they can achieve 5% interest, very difficult today, but these things were more popular when the prevailing interest rates were higher. They would set aside 85% of the money, buy a zero coupon bond that would bring that back to 100%, and then they do some leveraged option positions with the remaining 15% to create the upside. And if it goes down, there's no upside, but you get your money back because the zero coupon bond will build back up to 100%. And so the El Salvador Bitcoin bond has some properties like that, except that it's not an all your money back, it's all 6.5% return plus this kind of Bitcoin upside, right? So, if you look at the group of people that you have talked to about Bitcoin individually, you'll see there are some people who are philosophically interested, but a bit wary about the huge volatility swings, the 85% drawdowns in the past. And so they're not sure if they can cope with that, or alternatively are people who do buy and they get shaken out when the market moves rapidly. And we've just seen in the last months a pullback from 68K to 30K and now back to 57K, right? So there are people that can't, they don't like that, the sound of that. But if they can look at it in a form factor where they say, well, you only get 25% of the Bitcoin upside on the money, because half of the money goes into Bitcoin and half of the upside is kept by the El Salvadoran government, and the other half of the upside, if any, goes to the bondholder, right? So, you get a 25% upside, but you get your money back plus 6.5%. That is a quite different proposition, right? And then you also have to weigh into it the distressed debt part of it. One interesting kind of addendum to the distressed debt argument is that the Bitcoin component actually may reduce the default risk, depending on the details of the term sheet when that comes out next year, because there was at start $500 million of Bitcoin, and if that was today, $57,000-$60,000, it's a different question if you ask somebody, what do you think the Bitcoin price? Do you think the Bitcoin price will be higher in 10 years versus will it be higher next year? So the short term is more volatile. The long term, at least for the Bitcoin interested people, they're confident generally that it'll be higher in the future. So now, of course, the typical bondholder may not have a view on that, but they get the coupon too, and if they accept that it reduces the default risk, that might be an interesting way to look at it. And so there are ways. So Lyn mentioned about option valuations. So you can look at the Bitcoin part of it as a European leap option on Bitcoin, 20 tranches stretched out over the 20 quarters between 5 years and 10 years. And you can price those. And I had a go at doing that. And they work out to, on the whole investment amount, bearing in mind it's only a quarter of it, right? But on a whole investment amount, they work out to about an additional 2% coupon equivalent in expected value. And of course, the actual return value is highly variable. It could be zero or it could be large, right? But the Black-Scholes calculation shows 2% expected value. I'm not sure that Black-Scholes is really an ideal pricing model for Bitcoin, because as a model, it doesn't take into account, futures, yield curves, and price history and people's expectations and things like that. But it's an accepted and standard way to view it. And so, if you look at some of the previous conventional bonds that are outstanding, some of those were issued at, if you at like 8.5%. So if you add the 6.5 plus the 2% Black-Scholes valuation, you end up at the same rate effectively. So it's nominal, kind of expected coupon is arguably similar. Anyway.
All right, so this is related, but moving on just a little bit. So the IMF has responded to El Salvador's legal tender law pretty strongly. They have, basically said you shouldn't do it, and you should wind down your $150 million fund that's transferring between U.S. dollars and Bitcoins for the lot of work. And they've not issued like a thorough review of the Bitcoin bond just yet, since it's relatively new, right? Or very new. But at the end of a report they issued on November 22nd, I believe it was, they did state briefly that the Bitcoin bond would require a very careful analysis of implications for and potential risks to financial stability. And that last phrase, financial stability, really echoes what Hillary Clinton recently said about Bitcoin and crypto. She said that it has the potential to undermine currencies, for undermining the role of the dollar as the reserve currency, and for destabilizing nations. So this idea of destabilization seems like a narrative that's emerging from governments, the U.S., and maybe the larger international financial structure like the IMF and the World Bank. So, Lyn, do you think that this is an emerging narrative that we're going to be able to see as basically, quote unquote, an attack on Bitcoin over the next few years by these large institutions? And do you think it has any merit?
So I think it is one of the attack vectors, essentially. I think there's a couple ways they can phrase it. They're not going to generally just say it's a problem, don't own it. They're going to basically cover that in some sort of narrative. And so one of the narratives is that because of the volatility, it adds to instability. You also see that show up in the stablecoin argument. So that's obviously less about the volatility and more about the quality of the collateral, right? So whether it's Bitcoin, whether it's stable coins, they talk about the financial instability aspect. Around the margins there, so for example, if you have stable coins become very, very large, for example, I can see why regulators are understandably concerned about the financial implications for that, about how it affects their system. When entities like the IMF are looking at El Salvador, we have it. So if you look at it historically, how the IMF operates, we've been in this U.S. funding global debt market for about 45, 50 years now. And one of the criticisms of it is that countries kind of get stuck in these debt traps. It's possible to rise out of it, but it's very, very challenging. And so essentially, a lot of these emerging markets get cut into a situation where they get these partial bailouts so they can keep the system going, but they don't really have a way to escape it. And so they end up they owe a debt in a liability that they can't print, and that they are vulnerable to external organizations on. So for example, the Federal Reserve creates more dollars, right? So we have a big dollar expansion because everybody got stimulus checks and things like that. El Salvador, in their currency, they don't get the dollars, right? So and then you have other situations. If the Fed, for example, tries to tighten their monetary policy, if they try to stop doing quantitative easing, if they try to raise rates, you could get an increase in the dollar in terms of purchasing power compared to other currencies, and then the fact that El Salvador owes those liabilities puts them in trouble. And so we've had the dollar at the center of the global funding market for a long time. So if you look at the Bank for International Settlements, they estimate that about $13 trillion in dollar-denominated debt is owed by countries around the world outside of the U.S. And mostly they don't even owe it to the U.S. They owe it to Europe. They owe it to Japan. They owe it to China. There's a bunch of country by country networks there. And so when we talk about the way the current system is structured, we often think of the petrodollar system, where only the dollar can be used to buy oil, and that was like the heart of the system and how it got started. But now the other big component that's arguably even more important is the fact that a very, very large share of global funding happens in dollars, and a smaller share happens in euros, a tiny bit in yen, and then sometimes local currency bonds. But really, the dollar is kind of the big chunk of it. And so anything that kind of threatens the status quo and doesn't keep just the same kind of multi-decade trend happening, they seem to find that they view it as unstable. I mean, that's also what you see with generally any sort of tech startup, right? It's often called, that it's never going to work, that it's too risky. In many cases, that ends up being true. But it also is a case where that's where big changes are made. And so clearly what's happening is El Salvador is going for a little bit a strategy that, if it's successful, will actually move the needle. Instead of constantly kind of grinding in the situation they're in, they're saying, look, if some of these bullish expectations play out, and if Bitcoin has a very good decade, and if we're on board with that, then we can harness that for a variety of purposes. We can accumulate Bitcoin that accumulates in value, for one. We can mine it, use our resources to mine it, and then bootstrap those energy sources for other uses as well. So not just mining, but basically when you tap into that, you then can expand it, and then you can attract foreign capital, you can attract tourists, you can attract businesses. And there's a variety of ways that if that network continues to grow, that they feel that they can benefit from it, and that they're small enough and distressed enough that can really move the needle for them if it's successful. So obviously there's risks involved with it, right? So it relies on the health of the Bitcoin network. It also, basically they have to manage their execution risk well, right? I mean, mining is not a risk-free operation, and so there are a variety of risks there. But I do think that, especially from the lens of entities that, one, maybe don't fully understand Bitcoin, and two, have a very strong interest in maintaining the status quo, they're naturally going to view it as, destabilizing. And so I think part of that is just they generally view it that way. But I also think part of it is, the geopolitics that have been in place for decades.
Yeah, if you comment, so I think one thing that's, obviously there are a number of countries around the world that don't have their local currency. So of course, if you have a local currency and you owe a debt in another currency, you're at risk that, you have the weaker currency, it will get harder over time to repay the debt. But in El Salvador and a number of countries, they're actually using the US dollar directly, right? So at least they don't have that problem. And arguably, it's a good time to be in debt because, like, the inflation adjusted value of the debt is going down at, the M2 expansion rate is what, I don't know, like 30% a year. So if they're paying 6.5% interest and the real world value of the dollar just fell by 30%, as long as that continues for a few years, and they can convert the debt into economic prosperity, potentially they can, this is an interesting time to be in debt. Like, maybe that will help countries that are in this kind of debt. So that's a comment unrelated to Bitcoin, really. But I think it's a little, obviously we can't comment on, the politics of the region and geopolitics of the dollar and so on. Not really expert on that, but it seems a bit hypocritical in the sense that, many countries are buying all kinds of things at this point, right? With the QE expansion, Switzerland, Japan, the US, the government or some agency of the government is basically printing money and buying stocks on the stock market, buying bonds, and gold, foreign exchange. So, why not Bitcoin, right? So I do expect that there are a number of sovereign entities that own Bitcoin indirectly via stock indexes or stock exposure to public companies that have Bitcoin, And I wouldn't be surprised if there are actually sovereign wealth funds that have different types of Bitcoin exposure. So, I do think it's an interesting potential that, of course, we can't say for sure what's going to happen with Bitcoin, but there is a potential here that if they, successfully complete this bond and maybe do a few more, because they're talking about the Bitcoin City project, which is to basically build a new city around the new geothermal power plant they're intending to build. That they could create some prosperity by inbound investment. So something like the Dubai situation. Dubai was running out of oil some decades ago, and they embarked on a massive civil engineering with a government investment corporation participation, so that the government could benefit from the real estate appreciation of the civil kind of real estate value they created by doing that. So there's a prospect they could do something like that, and there is a possibility, which depends on your view of Bitcoin, that this across a few bonds that could really has the potential to actually wipe out their entire sovereign debt. So it may or may not happen, but it's an interesting bet. And if countries are putting gold on their balance sheet, and many countries do, why can't they put Bitcoin on their balance sheet? It seems like a pretty sensible thing to do, to my point of view.
Yeah, I find it a little ironic that institutions that have instituted this global fiat system are talking about destabilization and accusing Bitcoin of destabilizing economies or potentially destabilizing economies. What you brought up the Bitcoin City, Adam? Do you have any further thoughts there? Is it an interesting project to you? Is Blockstream involved in any way on the mining side or any of the city infrastructure work at all?
No, I think that's all future things. They have done some actually construction. They've been tweeting out like a construction site picture of building a veterinary hospital that they're building, apparently funded by the Bitcoin price appreciation of their. So I think they've got their local wallet, the Chivo wallet, plus you can use regular Bitcoin wallets and Lightning wallets. And so I think the idea with this $150 million stabilization fund is they're going to guarantee for local businesses that they will preserve the value intraday. So if they accept Bitcoin payments, they can get that converted into dollars without experiencing an exchange rate move. And so they bought $150 million of Bitcoin to stabilize that, but I think they are maintaining it. So they may be selling Bitcoin out of it if the value increases, and it has, right? So they may be buying Bitcoin separately, because I see the president tweeting about buying the dip a couple of times recently, which is pretty cool. But the point being that they seem to be very quick at building things. That's look pretty industrial, and things are being built. So I genuinely think they're going for it. So if they can complete this bond and attract different types of investors in future tranches, maybe mixing in, of course, the fact that Bitfinex is a bookmaker doesn't preclude other, funds, institutions, or market access vehicles to reselling and making available. That's just down to the regulation of their respective country and their licensing. So, it'll be interesting to see what the traditional bond buyers make of it, or the wider audience for the hybrid kind of investment.
What are your thoughts about Bitcoin City? Oh
I
yeah,
was
go
gonna
ahead.
say, I think the Dubai example is a good one. And I'd also use Singapore as an example. So 4 decades ago, Singapore was basically a swamp. But then they basically made a number of decisions, and they attracted a massive amount of capital, and they've so far managed that very, very well. They became one of the wealthiest per capita. It's like a city state, right? So if El Salvador plays their cards right, there's kind of 2 layers of risk and reward here. So one is the Bitcoin network itself, right? If it continues to be adopted, if it continues to appreciate, that's obviously an important part for the plan. And then 2 is the execution, how well capital is used, how well they position themselves so that there's a big bear market, which Bitcoin is not, it's not unusual for it to happen, that they are able to withstand that, get through that. And so basically, I'm constructive on it overall. I think basically, if to the extent that they can attract Bitcoin businesses, Bitcoin tourists, capital to mine Bitcoin, and then cut down on remittances, and then also just hold Bitcoin and a benefit from the accumulation. All of those are ways to position themselves very strongly compared to their peer Central American countries in the years ahead. So basically, I think a lot of the aspects of the strategy make perfect sense, and it just comes down to execution risk, right? So there's obviously concerns about the president's there's some authoritarian moves there that I think, for example, Alex Gladstein's been critical of those moves. I think a lot of it is I'm just kind of watching and seeing how it's going to play out. I think basically, ideally we want to see more countries do moves like this so that you don't have all of the perception risk kind of focused on one country and one particular leader. But overall, I think just quantitatively, the steps have made perfect sense so far. And so they made it legal tender. I think that that was not necessarily perfectly handled, right? They gave themselves a tight deadline to launch Chivo, and also, they've obviously, a lot of the population is still uncomfortable with using Bitcoin. This was kind of put on them. And so there are a lot of challenges there. But it starts with a bond auction, then it starts with, then monitoring for the next few years, how well is that capital being deployed? And overall, just what is Bitcoin doing? So I think it makes a lot of sense. And if it does work very, very well, then they end up kind of in that more like Dubai, Singapore type of, at least directionally, like that approach. Then if they come into execution risk, or if they have other problems, then it might not work out. So, I'm kind of rooting for them, obviously, for the people of El Salvador, that I hope that this is able to work out for them and be kind of a game changer over time. And it'll start to show up. We'll see what happens in GDP measurements for them over the next couple of years compared to some of their peers.
Yeah, I mean, I think one reason I was thinking of the Dubai analog, I've been there a number of times because my founder at a previous startup was living there for a number of years, and is that part of the Dubai formula was to attract expats to the region and wealthy people from surrounding countries in the Gulf region to a fairly liberal location, but with very attractive expat tax regime. And so, if you look at what they've proposed for the Bitcoin city, it's kind of similar to the free trade zones that Dubai has set up, and they have a media city, internet city, and they have free trade zones. And actually, there's a smart city in Malta, which is actually a collaboration between a Maltese government and the Dubai Investment Corporation. So they kind of set up another one in Malta, which is under development, for the last few years here in Malta. And basically, they are offering very attractive corporation tax, and the Bitcoin city is actually, also residential. So they're offering no income tax, no capital gains tax, all this kind of thing, and just VAT to operate the civic functions of the city. And Dubai is like pretty low tax in a similar kind of idea. So, and I think the other point is that, a lot of Bitcoin market-facing companies like exchanges and brokerages and so on are international in nature, right? So their customer base is global. They'll have incorporations in a country. Maybe they'll move countries if that becomes a more favorable location, and they'll set up a physical presence too. So part of the prospect that Bitfinex's involvement is they're working with the government to advise on what would be business conducive exchange and security licensing rules for the country. And a lot of exchanges are incorporated in like BVI, Seychelles, like various countries, Hong Kong, Singapore, so forth, right? And so if El Salvador puts together some well thought out and smart and business friendly regulations for exchange operation, that might attract physical presence and ultimately revenue and employment in the country, and the trickle down economy too, right? If you bring if a lot of new inbound investment comes in, they are consumers in the local economy, and it distributes money that way as well. So I think that's interesting to see that play out. Of course, that's still in development, but it's gonna be moving pretty quickly, I would think, because they're aiming to get this done in Q1 next year in terms of the bond, which depends on these licenses being enacted effectively.
Exciting times. I mean, El Salvador, as we've been discussing for the past 30 minutes, are making moves, and you've got to admire that at the very least. No matter how you think about Bitcoin, if you're bullish or not, it is always awesome to watch people and countries make moves like this. And I think Singapore and Dubai are great examples. Hopefully that's the way it will turn out for El Salvador as well. I know we are all cheering for them. Adam, I have one last question for you, and I know you may not be able to answer it at all, but I'm curious, are you at Blockstream working with any other countries on Bitcoin bonds right now?
We've talked to a couple of people from different locations, and there are also in the news in the last since El Salvador announced the legal tender law, there have been news from other countries globally where they haven't enacted a law, but they have initiated discussions about introducing a law. I mean, one, for example, was Paraguay, which is a very interesting location from a Bitcoin perspective because it has a lot of hydropower. It's a massive net exporter of hydropower in the region. Like, they export 90% of their power. It's all hydropower. So they have a lot of excess green power, basically. And there was discussions there. But I think the bond itself is a kind of an interesting hybrid financial instrument for that bond market. I mean, there's a lot of yield starved fund investors out there, right? And so you don't necessarily have to have a view on Bitcoin or like Bitcoin, but if you can see like the internet being adopted, people were some establishment was not very happy about the internet. It changed the balance of power, liberalized, and gave more direct control of things to the individual. So the establishment didn't like that originally. But if you can foresee that, well, this might be popular for some segment of the world, you can invest in that whether you like it or not, right? If your mandate is to make money for the fund, for the unit holders in the fund and so on. So, I think people, when it comes to making money, people get pragmatic. The bottom line is they have a fiduciary responsibility to make money for the fund. This is an instrument that has a real prospect of doing that, or a different risk profile for doing that. And in an environment where you're basically losing money in real terms quite heavily, right? I mean, negative interest rates or interest rates below inflation, headline inflation rates are heavily manipulated political constructs. Like, the real inflation rate, I think the MT monetary expansion is a better metric to look at for where it's going, because you had the the US establishment admitting in the last couple of days that maybe this inflation is not transitory. I mean, big surprise, right? So I think in that environment, and of course there's an enormous bond market, as we're saying, over $100 trillion worth of money basically looking for yield, and they're not getting it. So, or not getting it without a huge risk profile. So of course, ultimately this is, it has a credit rating, but it's not the best. It's distressed at the moment. You could try and work out the revised risk profile from the Bitcoin component being in there as a kind of second, vehicle for repayment. I mean, it's a possible outcome that the Bitcoin component exceeds the original loan size, for example, and depending on the terms of the final product, which I guess everybody will get to see in Q1 next year, that might be a vehicle to preferentially repay the bondholder, for example, right?
Awesome. Thank you so much to both of you. We are going to move over to Twitter Spaces for some Q&A from listeners for just a little while. So I will take over here to say goodbye to everyone on YouTube and let Lyn and Adam find their way over to the Twitter Space, which is live right now. A few hundred people have been listening. So thanks so much again for your time here today, guys. I'll see you over on Spaces in a few minutes.
Sure. Thank you.
Thank you.
All right. Thank you so much again for being with us for another episode of Swan Signal Live. Hope everyone here finds value in these shows. We do them every other week on YouTube at youtube.com/Swan Signal. You can get the pod at swansignalpodcast.com. And as you just heard, we're now broadcasting these as well on Twitter Spaces and trying as much as we can to get guests to come over there and answer your questions. Adam and Lyn will be over there in just a few minutes. That's all we have for the YouTube broadcast. See you in a couple of weeks for annual wrap-up show, the fourth quarter report with Andy Edstrom and Preston Pish.